of October 2023. It's nice to have your company. Ash will be joining me shortly, of course, and thereafter George, and we will be taking you through our weekly preview for what we believe may be a tradable commodity this week, or maybe two or three, or maybe none. We'll see. But hopefully I've got a few ideas anyway. We'll throw those past you in the near future. First up, though, we will have a look at the gold charts and attempt to find a trade on gold. I have got a button missing here, so I will just be 2 seconds. Rightio, there we go. Those of you here for the first time, welcome aboard. Nice to have your company. And you probably won't know what the heck's going on here, but bear with us. We hope that will become obvious as the show progresses. First up, as always, what we do is look for a breakout of Asia session. And we use gold versus the US dollar on the 1 hour chart to facilitate that. Where Asian session begins is the second candle of the day, which is that one right there. And you can see we've got a pretty tight range here thus far. So we'll isolate that. The low since open of Asia is right there at the low of that bar. And the high is the high of the current bar. So we'll move that one up to there. So that's the range that confronts us today. Do we want to trade this is the question. Now, what we're using as targets are the pivots. In this case, we're looking at DR3, would you believe, to the upside, and DR1 to the downside. I think either is probably acceptable. The downside's a little bit skinny on reward. DR1 is only about $5. The risk is about $8.50. So that one's not that great. The upside, the reward is $4 or $5 investment. About double that, 10. So that one's okay. We have a little level here that we've got to sneak through, of course. Big gap on gold this morning, and quite a few other of the pairs that we follow as well. That haunts me. I hate gaps. They're terrible things because we know that eventually they'll close. What we don't know is when. Yeah, look, I'm not wrapped, I've got to say. And the reason I'm not wrapped is because of the gap. And if we were to go short, we've got to get out at DR1 and the gap's then likely to close. And that's going to give us the SH1Ts. For the upside, I think we're trading away from a gap, and that I don't like either. So it's a no from me. I'm not going to take that trade this morning. We also have a US holiday because of Columbus and his venture around that part of the world some time ago. So I expect that we're probably not going to see that much movement on gold today. So for that reason, it's quite probable, in my view, that we'll get this range to continue or break to the downside to come back and close that gap. And as I say, rule says we'd have to get out there, and that would give us the SH1Ts if we close the gap after taking only a very, very small profit, which would be far less than 1-to-1. There you go. So that is that. And let's move on, shall we? Now, those of you who are here regularly will be aware that I had 4 positions in the market last week. Let's have a look at them. First of them was pound versus the yen, and we went short here, trading this bar. And we got our TP1, no problem. What happened on the overnight session on Tuesday was a bit of a pain in the rear end because I didn't set myself a TP2. So I missed all of that move. We had trailed our stops and taken a second profit by trailing our stops. But sadly, that news, which was, can't remember, put the yen pairs back into negative territory. Would we be surprised at that? No, definitely not. Is there a lesson to be learned in this? Yes, there is. Take a second profit or set a second profit level while you sleep. And if you wake up and that's happened, it wouldn't be such a crime, would it? But yeah, we've missed all of that. And sadly, or not. Is it sad? Well, I'd rather have put it in the bank, I've got to tell you. But the good part is we've come straight back to the resistance level. Big gap down this morning, similar to gold. That makes it difficult. And I'd much rather see, a natural false break of resistance to trade it back to the bottom of this range. But I will look at today's price action. If we were to maybe test the weekly pivot, then bounce back, give us a lower high ultimately towards the end of the week, then I could think about it. Otherwise, this is a no-go zone for me at the moment. We had another one set on the yen, and we traded this bar a couple of weeks ago. Exactly the same story. In fact, it couldn't be any closer to a replica, could it? Exactly the same. And I won't go through the process again. That's exactly what happened for a second time. Again, take profit taken. So winners, both of them, yet they could have been a whole lot better by simply adding a TP2 or a target. No, I wasn't interested in the target because this is, don't forget, trying to catch a reversal. And the reward available down here was absolutely substantial. In fact, I added to these positions with an entry underneath that bar on pound yen and an entry underneath, on Swissy yen and an entry underneath that bar on pound yen. Of course, neither got even close to being triggered. The third position on the yen was Aussie versus the yen, and we traded this bar here. And again, not even close to an entry. Interesting now. It's giving me gave me a false break to go short, and now it's giving me a false break to go long. Those of you who don't know what I consider a false break to be, it's simply a break of what I call a trade line, close to a trend line, not the same. And when it breaks, comes back and closes underneath it, that's this line here, then retests it. That, to me, is a pretty clear signal that it's a false break. And for that reason, I put an entry underneath the break that retests the trend line or trade line, call it what you want. Now I've got exactly the same thing in the opposite direction if today's bar closes as a seller bar. And if it does, I'll look at this tomorrow and consider placing a long order above here, but I might have to get my stops way under here. I don't know that I can trust that little bar. We'll see. That was the third position. The fourth position is euro versus the pound, and that's still in the market, but doing absolutely jack, not doing a thing. What we're trading here is pretty much a range trade where we've come off the top of the range and we've been presented with a lower high, which was the trigger for me to enter the market. I put the stop loss above the range for added safety, and ultimately, I still think this will probably go down here, but my goodness, why on earth is it taking 1 month of Sundays to do it? Pass. Can't answer that question. All right, so those are the trades that we were in. 2 winners, no entry, and so far nothing happening, but we are slightly in profit. Righto, this week, what do we got? We've got, I'll give you the trade first, and those of you who are here often will not be surprised to know that I'm trading CAD Swissy, and I've got a long order placed just above this trade line. Now, I'm going to clarify this by saying, just like I'm trading euro versus the pound at the moment, short because it's in a range and we've come off the top of that range, so too has CAD versus the Swissy. What it hasn't done right now is give me what I seek more than anything at the moment, and that is a higher low based on this double bottom here. So I'd like to see price come down to here, fail to take out these lows, and give me a reversal bar. That would be probably my trigger to change the entry. from where it is now, but I've got a classic slingshot candle pattern sitting here, and it's had a precursor here, and it's had another precursor here. So I'm really, is this a just in case? I call it a just in case. Just in case the candle pattern proves me correct, then I've got this trade placed above here. So if it doesn't fill the range, then guess what? If X doesn't happen, Y generally will. And for that reason, I've got this this long position above that bar, stop loss underneath it. If you want to follow that, the entry's at 0.6755, and the stop loss is at 0.6635. The first take profit is just before the high of the range at 0.6825. So that is my first trade of the week, and it is on a weekly chart. So that's got a lot of time to fill. If I do see that higher low down here that I seek, maybe anywhere at or beyond that red line. And the reason for that is because that's where I feel the support level is, right here. So that's what I'll be looking for. I'll be looking for the higher low here to change my entry to a little bit lower. Game changer, but before we go any further, I suppose I should divulge that I'm very keen on the Swissy pairs this week. I think the Swissy pairs are in an interesting position. CAD Swiss being one. This one here, Euro Swiss, is pretty much the same. A little bit different. We have had this big bullish engulfing bar way back when, in September of 22. Nothing much happened with that. Well, I suppose you could say it did, but it didn't really go to the resistance area that you would anticipate, or did it? That would have been the one I would have anticipated, but it went to here and fell back again. Very, very nice, steady trend to the downside. Hasn't quite reached that previous support level, but it did find support. Now, in essence, if you go to a monthly chart, that's going to show you the reversal and a higher low. Yes, there have been a few, 1, 2, this is the third, but we have consolidated substantially at that point and now come back above the resistance level only to let me go tighter, wrong button, only to last week give me that retest, if you like, of, well, the monthly pivot and, of course, that horizontal level and my trade line. For that reason, very, very similar to CAD Swiss, and I had to kind of make up my mind which one I was going to trade here because it's going to be the same trade, I believe. I chose CAD Swiss over Euro Swiss. If you wanted to aggregate your risk on the Swissy, then I would suggest that perhaps entry there, stop loss there would make sense also, but split your risk between that one and CAD versus the Swissy. But it's not the only Swissy one I like. Swissy yen I can't possibly trade short given the weekly bar. But if I go to the daily chart, and I might as well use my analysis chart for that, go back to it. If I got a false break of this trend line, it's a trend line, it's a trade line, it's the top of a range, it's everything. So monthly pivots included in that as well. Weekly pivots not, but that's untested. Naturally, it's Monday. Daily pivots in there also at the moment. If price were to consolidate here at this level, which was, don't forget, the neckline of whatever I wanted to call that. What did I call that? Descending triangle, box range, whatever it was broken and retested, and that I chose to call the neckline. So that was the position that we took, and I won't repeat myself with what happened, but it did it for a second time. So it's retested that and rejected that level for a second time, or third, really, if you want to count that one. And now for a fourth time, it looks to be in exactly the same position. Look where last Friday's candle closed, pretty much bang on that level, which is 164, the figure. So my contention would be if we get back underneath this level and retest it, certainly retest the confluence area, then I'd be more than willing to trade this short again. So there's CAD Swiss, Euro Swiss, Swissy yen. What else have we got that trades the Swissy? We've got Aussie Swiss. Let's go up there and have a look at that one. Not so much. Suggesting that there's a game changer bar on Friday, which would give you an entry above the monthly pivot. But really, look at the mess down, or a high test bar, spinning top, low test bar, probably one you want to leave alone. I don't really see that as a good conveyance. Certainly nowhere near as good as the CAD Swiss or the Euro Swiss. Swissy yen we've dealt with, Euro Swiss we've dealt with, pound Swiss we have not. Now, pound Swiss, as I've pointed out many, many, many times, is in this incredible range. And when this breaks out, I want to be a party of it, or a part of it, a party to it. And we're looking at this big bullish engulfing bar nearly 1 year ago. In fact, I think it is October's candle, wasn't it? Yes, it is. So last October 2022, we put in this big bullish engulfing bar after a massive rejection of this 102 level or whatever it is. Since then, every bit of price action has been inside that candle, every single bit. And when that breaks, that candle, I think it's going to do so with a very, very strong move. And that's what I want to be a part of. Where that move goes, well, good question, but and one I can't answer right now. Where would I like it to go? Well, I'd like it to go long, because we've got 1, 2, 3 false breaks in succession. And that, to me, is a signal that the range, which is probably here, or you can include that if you want, will break to the upside. So can I do anything about that right now? Well, on the weekly chart, I've got nothing. I've got a whole mess. But you can see that we've gone into a tighter range, even if that's possible. And there's the range. We're at the bottom of that range once again after a gap down this morning. So the 4-hour chart becomes reasonably attractive. And we have bounced off the bottom already. A higher low in here would get me interested on a 4-hour basis, trading it up to the top. But the same could be said of the daily. If we got a clear rally and pullback, giving us a higher low, I think trading that to the top of the range makes sense as well. So pound Swissy is also in the mix. Kiwi Swissy, on the weekly chart, the Kiwi Swissy has done exactly the same thing as has Euro Swissy, and CAD Swissy pretty much the same as well. So you could throw that one in the mix. It has broken the trade line. It's broken the horizontal level. It's retested both of those, and throw in the monthly pivot there as well. So this was a tough decision between CAD Swiss and Kiwi Swiss. I chose CAD Swiss primarily because we made some good cash on it a few weeks ago, and therefore we're trading this with profit. Let me put it that way. Some people say we're trading with their money. That's a bit of a stretch for me. I think my money is not mine. It's in my bank, it's not in theirs. So I chose CAD Swiss. But you can see where I'm going with all this. The Swissy looks to be particularly attractive to trade against this week. Dollar versus the Swissy, got that pullback bar, and similar to the others, it has broken the resistance support level and retested it. So an entry above, stop loss below the monthly pivot in this case would be appropriate. Speaking of the dollar and dollar versus the Swissy, we do have a little bit of space left for the dollar index. And for that reason, I'd be very, very willing to pick up a buy on the dollar or a sell on the other pairs against the dollar, but not yet. Why? Because of last week's bar. Last week's game changer bar is suggesting that we're going to get a retest of the top of the range. That has now been broken. Monthly pivots in there as well. And of course, it is a horizontal level of support and resistance to boot. So that one's that one's not out of the question. In fact, I quite like this scenario, but I do think we're going to see some selling early in the week. We're not seeing it now, that's for sure. But I do think we're going to see price come back to this level here and maybe a little bit of interest added. Then I'd like to see a rejection of that level. That would suggest to me that the dollar will strengthen yet again. And if that's the case, then we've got a whole bunch of things we can pick on. Probably pick the strongest currency. And I would suggest the strongest currency would be the dollar. So let's go and have a look at dollar CAD. Oh, that was the other one we were in last week, right? Dollar CAD. Forgot about that. So what happened to dollar CAD? Well, was it last week? Or did we get out of it? Oh, no, it was last week. We got in on, was it this bar? This bar. Or was it it was a weekly trade, I think. Yeah, we traded this bar here. And we trailed our stop with full anticipation that price would hit this 138 level, which it did almost to the pip, did it not? A little bit short. But you can see it's hit exactly where we anticipated that it might, and it has pulled back since. The interesting part about this one is that if today, you can see the current bar, if today that is a bullish bar, let's say it closed up here somewhere, that'd be pretty cool. I would place a short entry on dollar versus the CAD tomorrow and put my stop loss. Good question. If it closes before that high, I'd put my stop loss above that high. If it closes above that high, I'd just trade the candle. So very much looking at dollar CAD. But like I say, I don't expect this will be a long-term trade. Monthly pivot looks particularly attractive. And if you go back to the dollar index, if I can find it, there it is, that would be looking very much similar to the dollar CAD. So dollar CAD, 100% on my watch list. And if, as I say, tomorrow that's a bull bar, as long as it's not up here somewhere, I would look to trade that short. Dollar CAD shorts and everything against the Swissy looking, I don't know why I hate, well, it's not so much I hate the Swissy, it's more, and I don't think Ash is in today because he's in Singapore or somewhere around the world doing something, with ATW, of course. I don't hate the Swissy, that's not true. I'm very much, and for those of you who are new, very much a case of, okay, if the bears here do not take control this week, then the bulls probably will. And if that's the case, they're going to retest the top of that range, which is where my first take profit is. So it's more a case of if X doesn't happen, Y generally will. It's not a case of, okay, I hate the Swissy for a reason. The only reason is that I'm against the Swissy this week is purely technical. It's got nothing to do with anything else. And that's where I miss Ash, because I won't get that fundamental analysis on the Swissy until I actually have a chat to him, if I can get him later in the day. Anybody who's got some ideas on why the Swissy should not be traded against or should, then please give me your ideas. More than happy to hear them. And those of you who are, in fact, new to the show, this is what it's all about. It's about sharing. It's not about me talking incessantly, which I'm sure you'll get sick of. It's about everybody sharing their ideas, not just me. If you've got some ideas or you want to share something or you want to ask a question, please feel free to do so. The chat box is there for that reason. You can come on mic, you can come on camera, you can do whatever you like. It's your show. It's all about you guys. We'll be expecting George in the room very shortly, but before he does come in, I would be more than happy to take you through the weekly game changer bars for this week. Let's have a look. The first of them is, I believe, Swissy versus the yen. I won't spend any time on this because we've already spoken about it. But those of you who are in the show for the first time, you will have no idea what I'm talking about when I talk about a game changer bars. Catherine, I'll answer that question in a sec. A game changer bar is simply a candle, bar, call it what you want. But on Monday, I look at them on a weekly chart, right? So what they actually are is a candle if price is going in a short direction or people are selling, then the candle that I'm looking for is a candle whose low is lower than the previous bar and closes on or near its high. So I'll say that again. A candle whose low, this point here, is lower than the previous bar's low and closes on or near its high. So in this case, that would have been one of these. So low was lower than that, closed not on its high, but near its high. And the rest worked out just nicely. So that's what I'm looking for. If the market, however, is in a bear trend, let me get rid of this so I can show you, then the reverse applies, as always. So if the market's going down, a game changer bar is a bar whose high is higher than the previous and closes on or near its low. Doesn't need to be a red bar, a red body bar. It can be any color, doesn't matter. As long as it's closed near the low, and that can be subjective, yes. As long as it's closed near the low, then that would be a game changer bar. And that's what happened. So in this case, we've got a game changer bar to the suggesting that we buy above that candle or bar, put our stop loss below it. I'm not against the direction here by any stretch of the imagination, but what I am against is trading straight into the ultimate high. In fact, I just don't like trading in the highs full stop. To me, you buy at support, which is probably where we are. There is a bit of support there, but you don't trade into resistance if you're going long, and you don't trade into support if you're going short without taking profit. And I don't think I've got a reasonable enough room here to take profit that's going to be decent. So I've got a reward of 194 pips versus a risk of 460. Doesn't work. And we look like we're wanting to roll over here. So that's not one I'd like to trade. So hopefully you've got an idea of what a game changer bar is. It has to be in agreement with either the major trend or the major chart pattern. In this case, you could not argue that we are in a strong bull market. So going long here makes sense. Going long at this level with the risk involved does not. So on to the next one, which is Euro versus the yen. Now, Euro versus the yen is even a stronger bar with that big move on the yen late in the week, which, of course, those of you who aren't aware, there was a rumor going around that the Bank of Japan last week had intervened in the market to, support the yen. And the market sold off quite substantially, but only for a very short period of time, because the yen is so weak over a long period of time. And as soon as that rumor was quashed, the market went straight back into bull mode against it. Euro yen was one of those. And again, that creates a problem, because you've got a small travel, if you like, until you hit the ultimate high with a very big candle to trade, if that's going to be where you put your risk. If you put your risk up here, then not such a bad problem. And I think that's probably the key to trading this week. Yes, you'd agree with the direction, but do you want to take that big risk on board to get that reward? Answer no for me. So I think the better thing to do would be to look for something like this, which is looking very much like a false break. So the only thing I hate about this is the fact that we've got this gap. which, as we know, will close. What we don't know is when. It could be a month from Sunday. It could be 2 years from Sunday. But it will happen. It might be tomorrow. I don't know. But if this is a bear bar, and in particular, if it retests that trade line, this is an absolute classic setup to trade long the way I trade. So I'll be doing that tomorrow on euro versus the yen, if and only if I get that bar. It needs to be bearish, and I'd like very much if it retested the trade line and probably went no further. Maybe a little bit further is okay. So euro yen I agree with direction wise, but what I don't agree with is trading the bar per se. And that's often the case with these game changer bars. Catherine, I'll answer your question. For the Swissy, sentiment for risk-averse behaviour increasing due to, yes, that's very true, which is a problem if you want to trade against the Swissy. Now, I don't know how bad that's going to be. And again, poor old Ash, probably having a good time. If Ash were in the room, he would probably have a far greater handle on what that is likely to do. That situation, of course, with Israel. So I hesitate very much to comment on that. Common sense tells me that if this escalates into something, and that is atrocious, there's no question from what I've heard, yes, the yen and the Swissy should come into favour. That is true. In my opinion, at this point in time, I don't know how well affected or much affected that would be at this point. I think it's kind of watch this space and see how the world reacts to that, frankly. So, yeah, the fundamentals are not my game by any stretch. So I would like to defer that to Ash. And Ash is not in the room. George might have an opinion. He's just joined us, and I'll get to him in just a tick. So really, that's my thesis for the week. The yen pairs and the Swiss pairs, as Catherine points out correctly, are very much in the balance due to this this war that's well, it is war. They've declared war. This war in Israel. So we've got a couple of wars going on around the place. And the brain says that you need to watch these pairs closely in the next little bit. So if you do get into a yen pair or a Swissy pair in particular, Zachariah, thank you. Thank you for being in, and thank you for letting me know you've got to go. Have a wonderful rest of the day and week. So, yeah, as I was saying, be just aware that situation is unfolding, and you will probably see the start of that, if you like, if the world does react to what's going on over there from a market perspective. Catherine's saying she'd like to go long oil at some point, given the retracement, but very mindful of the gap today. Yeah, look, I hate gaps. Gaps are really, really annoying to me because, as I say, we know they're going to close, but we don't know when, and that's a challenge. Unfortunately, from a buying perspective on oil, and I guess the war is going to have an effect on that too if it escalates, I'm seeing a very clear sell here if I get a bull bar today. But I need to see that bull bar. I'd like to see it come back and retest that trade line for sure. So that's where I'm at, I think. The thesis is watch the euro and Swissy pairs, but I'm really, really keen if the war doesn't really get into, pardon me, a risk-on, risk-off situation on the market. So in other words, if the market doesn't get jittery, then I'm very keen to trade long against the Swissy. We will see how that pans out. Yes, I've got a very strong opinion yet again on dollar CAD short, but only to here, and then I'd like to pick it up long. So a little bit wishy-washy in the beginning of the week. The only thing we've got in the market at the moment that's doing anything well, sorry, it's not doing anything, but it's at least we're in the market, I suppose, is euro pound, and we are short. Let's see how that pans out. Righto, George has joined us. G'day, mate.
Good day, mate. How are you doing?
Mate, I'm as well as could be expected under the extenuating circumstances, I would imagine.
Yeah, it's I guess it's the world we live in, right? Anything can happen at any time. So,
And does, yes. Almost without warning at times. And I think, and I don't know anything really about this fracas apart from that it's happened. So I haven't had time to digest whether it's super serious, whether the market's going to react to it. You got any thoughts on that?
no thoughts at all, actually. Pretty embarrassed to say that I was completely off news on weekends. I don't watch any news.
Same, mate.
And
same.
It's just this morning that I'm picking up that we have a war situation. That's I did a quick search to see. I said, "Oh my goodness, that's just erupted, right?" So I'm as not naive, but I'm as unclear as everyone else what's taking place. So we're just going to have to watch and see whether it becomes prolonged, whether they can quickly resolve it or whatever, and see how the markets react to it.
I think trying to predict that at the moment is probably a bit tough.
Yeah, I think it would be. So
I mean, the mind goes to safe havens, right? Immediately you hear of fracas and wars and all the rest of it. Your mind goes to safe havens, but I haven't seen any evidence of that just yet.
I mean, there hasn't been. I mean, what surprised me was where the markets opened. This was before, I picked up the news. After that strong bull run we had after the NFP. So I kind of saw that on Friday, and I got up thinking, oh well, there might be follow through today. So looking at the daily charts, let me just. When I looked at the daily charts, I was surprised actually to see that. In fact, I'll go to the daily charts just now. I logged in a little bit late because I jumped into some shorts, and because of just the price action wasn't as clear as it was, I decided just to watch them instead of leaving them alone. So this is dark. So this was the opening candle, and you'd have thought double bottom, wedge bottom, a little bit of acceleration up and maybe a higher low double bottom to trade, but immediately with this big bear candle, and I thought, well, this one of the patterns that I look at, which is clearer actually on the UK 100. I'll look at that just now. But it favors a short, even though we are at a double bottom. It's you have the double bottom attempt, an immediate failure, and a distant enough candle. So I sold. You see, I just took this off MT4. So I sold here, and then when we're accelerating down, I should have sold. Well, I sold here, but the fill was a little bit bad, so got filled in here. And then when you got this candle, it's pretty disappointing because at least if it was a bear doji or anything, I would have stayed in. That's when I said I'm managing the trade. So I closed both trades here, which turned out to be a good idea. So banked a little bit there.
Good move.
Yeah. And I said, so yeah, this pattern that I look at looks a little bit clearer here on FTSE. And
not sure.
Sorry, sir. So am I frozen? Am I here? Yeah. All right. I'm not sure if that's me that's frozen or is it Jeff. I think it could have been Jeff. I'm still on screen and he probably will come in as the host. But let me talk through this, guys. So the pattern that I look at, at the open. So, hey, Jeff, you're back. I thought it was me that had disappeared. You're muted, mate.
Yes, I crashed out, but came straight back. It's this happens every Monday at this time. It's Elon Musk because I'm hooked up to him. See, I'm hooked up to his satellites, and they must just go behind a cloud or something at this time every Monday. Crazy. Fortunately, it's only for 10 seconds. Blooming Elon Musk, you'd reckon he'd fix that up, wouldn't you? I might give you a ring, eh?
Yeah, so the other trade I was saying, the pattern I look at, which, when it does, I jump in, off a potential double bottom, wedge bottom with the Asian session, good bull candle for the bulls. Now, with that, we're coming right up to a potential double top. So what I prefer to see is we break out above that, come back and give us a signal. But instead, we had an immediate reversal. So low test, high test, and that is usually decent enough to try and get a one-to-one. So I took that trade. I had a stop above here, and I put just above the high of Friday. And when we had the follow-through sold again, but immediately when it started to turn, I closed it. So, good turn on both of them. But it's just, you need a little bit more patience to see. What I'm waiting for now, I started talking about, let's go to the daily. So when I said, having seen Friday's bull acceleration, NFP, and coming up to test the EMA, I thought if we opened up somewhere above here, we'd have immediate follow-through of sorts. I don't know how big that would be. So seeing a gap down after such a strong rally was quite interesting. And I presume the news played a big part of that. Now, whether that's going to hold or the bulls are going to come back and just accelerate up is what we must watch for. So, that short is already reversed, the one that we saw. Again, on DAX, look at that. Barely even blinking with a gap down, and now we're accelerating up. So again, same thing, big gap down on the daily, and now the bulls are accelerating up. Now, you just have to be cautious. Yes, the bulls are accelerating up, but if you look at the bigger picture, we are in a bear trend. If the bulls were breaking out above here, then we say, well, there's a chance maybe to break the trend line and accelerate up. So you might get bull acceleration today. Then the bears coming back and the bulls coming back might end up as a perfect doji uncertainty in the market, maybe reflective of what's taking place. But it could give us good opportunities to trade either way, up or down. The shorts didn't go very far, but if you manage them well, you'd have banked a bit of profit. So right now, I got to wait and see. We're back, almost to the open. So do we get a double bottom down here, or we're going to get a double top? If we get a double top, then we can look to short. We might just end up with a decent enough twin range. And just a quick flip through, it's the same thing with all the indexes without even going down to the 5. That gap down. S&P 500, NASDAQ 100. NAS closed right up above the EMAs. This would suggest that the bulls are pretty strong, right, for acceleration, because we're closing above. This was Friday's above that trading range, above the EMAs. Unlike if you look at S&P 500 just above the EMA, but still within that bearish trading range. FTSE and the DAX were well within the below the EMA. And Dow Jones, when one was trading that, again, big bull acceleration, but still below the 10 EMA indicator of strength. And interesting enough, I know it's so far from the US session, but unlike the other indexes we've seen, where there's been a bit of buying on Dow Jones, the top 30 companies is selling off. We'll see how far that goes with when we get to the US session. A big sell-off and bears coming back in. So I think it's going to be hard to really call an outlook for the week. In the absence of what's unfolding that the world is watching now, I could have been saying, well, maybe expect a little bit more follow through from the bulls, and let's see whether the bulls can take control of the day. But that news, it's been baked in, it's going in now. People who move markets are pretty close to the decision makers. They might not be close to what causes the action, but they're pretty close to the decision makers. So we will get a sense by the time of the day closes. And the sense I'm talking about is whether we will break above the high of Friday or the lows. If we break above the high, then we can accept acceleration up. That means the bulls are aware of the news, but we're not pushing the market up. If we break beneath the low, then you can expect that the markets will just tumble. So what happens at the break of the highs and the lows of Friday is going to really determine my bias for the rest of the week.
Yeah, I think pretty uncertain at this point. And I think with those candles that you're looking at for last week, if they do break in either direction, I think that might be a very, very good indicator as to what happens next. That said, there's no US session tonight, or tonight for me. So that's going to be a little bit tricky. And I think I'm pretty much in favour of staying out of the market at the moment until we do get maybe a direction from this session, which doesn't appear to be happening, appears to be going nowhere at the moment. And maybe tomorrow is the day that we see, unless something dramatic in terms of, I don't know, Joe Biden says we're going to support whatever, or somebody else comes out and says, well, okay, it's our war as well, let's fight. Don't see that happening. But as you said, George, at the beginning, anything can happen at any time. And with that unfolding situation, I think it's probably a good idea to err on the side of caution than it is to be bravado and jump into anything in a big way. Maybe a little bit of caution.
Yep, would agree. Definitely agree.
Okay, that's George and my opinion for the week, guys. If you have one and would like to share it, or if you have any questions, it's now question time, and we'll stay here whilst ever you've got questions and answer them. Otherwise, we will just simply bid you adieu. So I'll give you a couple of minutes to put some questions in the box. One of them is from Paul, and he's asking me about the Aussie dollar. There's a widening wedge that he can see. Let's investigate that. I'll just take the screen back again. George, you're done. If I can find the control panel, there it is. Okay, Aussie versus the dollar. Righto, let's have a look at bigger picture stuff. So what I see on the big picture is this kind of thing. Inside of that, and what I'm seeing here, Paul, is where you are, right? You're inside this triangle here, but you're also suggesting, and I'm not disagreeing with you for a second, I think you're also seeing this. I'll just get rid of that trade line and pinch it and put it there. And that looks fantastic to me. I love it. So we're zeroed in on this area, and I'm thinking bounce time. But it's break or bounce. So at this point, we don't know. What we do have is a false break here, a false break here, and a false break here of this range. 3 amigos, right? We're at the bottom of the broadening price pattern. We've now come back into the range, and the dirty, rotten scoundrels, look what they've done. Cheers, Catherine. Thank you. They've given us a gap. Didn't want a gap here. What we did want is a seller bar. We've got a seller bar. So I would still trade it tomorrow if this bar is bearish, very similar to what I've said on a couple of others. So I need to see that as a bearish bar. Love to see it maybe a little bit deeper, maybe even challenge that low there. That would then give us potential head and shoulders or inverted head and shoulders as well. So I'm pretty much on board with, I think that's what you're seeing, Paul, if I'm not wrong. And if that's the case, it coincides with the big rectangle, which is the box range. We've broken clear of that, come back inside it, and now we're getting that bear bar. So I would definitely be a buyer tomorrow of Aussie versus the dollar, if that is the case. Now, does that hold true with my thesis that the dollar index comes back to here? Yes, it does. So I'm good with that. I like it. I like it. Directional bias is great. The technical scenario is great. Let's do it, Paul. Just need to see that seller bar. That's all I need. If you can find another way in, then share it with me, because I like it. I do like it for some upside. But that said, my thesis is also that we only go back to here. So I think it may well be short-lived in the first instance until we then get up to here on the dollar index, and then we take over again. So managing that, in my mind, is probably going to be interesting. So up to the top of the range, happy. Back down as the dollar goes back up to its resistance area, and then look for the breakout long. Gee whiz, that sounds all good, doesn't it? I'm all over that. Let's hope it pans out and it sets up for us. Cheers, Paul. Thanks for the question. Ash would be looking at the CPI this Wednesday, Thursday, and before those, if a long setup can be had on a lower time frame. So we're all in agreement. Oh, okay, cool. Cheers, Paul. Righto, so we're all Aussie dollar bulls. Whoa, where'd that come from? Technical's good. Yeah, I like it. Yeah, for this week, I agree. It's not a long-term thing yet, until, as I say, my thesis is pull back here, which gives us the Aussie long, then back up to here, then we go Aussie long again at this point at 108. There we go. That's what I see. Any other questions, guys, before we depart? More than happy to stay here if you've got a question. That includes you guys on YouTube. Please feel free to enter a question into the chat. I'm only too happy to answer them. Or if you've got any ideas, if you've got any trades that we need to be looking at, then please share them as well. That's what this show is about. It's about sharing. Sharers are carers, don't forget. All right. Looks like we've got nothing else at the moment, so everyone's happy. All good. Cheers, Catherine. Cheers, Paul, for the questions. Cheers, whoever else asked a question. Who else was that? Oh, Zachariah left. That's right. All good. Right, I think we're devoid of questions, which means we're going to close. George, thanks for coming in, buddy.
No problem.
Final thoughts? You've shared what you need to share?
Yeah, no, I'm all good.
All right, buddy. Have a great week.
Cheers. Thanks. Bye-bye.
And thank you all for being our trading buddies for this Monday, the 9th of October. We look forward to your company again next week. And, of course, if you are a member of the Slingshot Elite, so what it's called? No, Ultimate Slingshot, sorry. There's another one. If you remember that, we will have a Q&A coming up in about 2.5 hours from now. No, that's not right. Hour and a half from now, something like that. And for the rest of you, have a great week ahead. We'll see you next week. Bye-bye for now. Hooroo.